Welcome to the Mutual Fund Show. I'm Neeraj Shah. The next 20 minutes, we'll talk about two key aspects of mutual funds. Our guest today, Mrin Agarwal, financial educator and founder of FinSafe India, and Rushabh Desai, founder of Rupee with Rushabh Investment Services. Both of you, thank you so much for taking the time out. Now, before I get my guests on the show, here's a statistic that I got from a tweet that came in from Mihir Vora. Mid-cap and small-cap fund assets at 23% of mutual fund equity assets are now greater than the large cap fund assets, which stand at circa 15%, and also larger than the largest category of equity funds, which is flexi cap funds, which is about 15% as well. Inflows of 6,800 crores in August. And frankly, if you look at the last few months, you would notice that even if they may not, at times they have been the largest money gatherers, and at times they might not have been. But the flow of money into mid cap and small cap funds has been very, very strong. And that brings to light the quantum of money chasing a set of stocks which are not the largest constituents of market cap. In fact, about 70% of the total pool is large caps and 30% is mid caps and small caps. So therefore, it becomes pertinent at that point of time when the Nifty is at 20,000 and the mid caps and small caps have rallied even more to try and understand what to do with your mid cap and small cap funds. Should you be aggressive? Should you stick to the path of an SIP? Or should you even take the step of timing the market? And that's what I'm going to ask both of our experts to do. Mrin, I'll start off with you ladies first as always. How do you look at either existing investments or current or coming up investments into mid-cap and small-cap funds, considering that not just that the Nifty is at 20,000, which it can be because it can be at 30,000 in some years down the line, but the fact that there has been a very stupendous rally in the mid-cap and small-cap spaces in the last 3 or 4 months?
So good afternoon, Neeraj, and it's always lovely to be here. I think, as always, when we see markets rallying, we also see a lot of trend chasing happening. And I think that's exactly what's played out this time, where there's been a lot of trend chasing on investing in small caps and mid caps. And I'm happy to see that, but the only thing that worries me is this money really in for the long term? Or is it just trying to capitalize on some short-term market moves, right? And so I think for all of those investors who have invested already in this space, whether it's a few years back or whether it is recently, of course, my advice would always be that have the right time frame of investment. And typically for mid caps and small caps, we do advise to have at least 10 years of holding horizon, right? So if you've just entered in the last couple of months, you still have a long way to go. And don't look at this as a quick money making mechanism, because honestly, I think the reinvestment risk is going to be quite high. I mean, I don't think that that it's going to be easy to say that, okay, I'll quickly exit and then I'll just go and put my money somewhere else, right? So I think that's what investors need to be really cautious about. And also new investors who are looking at this space because they're seeing the recent performance need to keep the same aspect in mind, that have the 10-year holding horizon, and remember that these mid caps and small caps can be extremely volatile. So are you ready to face this risk or not is another aspect that you need to consider.
Rushabh, I'm sure you're armed with data. I'm wanting to hear, what is it that you are thinking of when it comes to investing in mid caps and small cap funds? And is it prudent to take some risk off the table or not necessarily?
Neeraj, first of all, good afternoon. Thank you for having me on the show. Currently, to put it very simply, we are not in a bubble, at least at this point of time. Definitely, yes, markets are expensive. Okay, but let's try and understand that this rally we have seen in the past 6-7 months. This has come after a long time correction. We have had a time correction of around 18 to 20 months. After that, we have seen this kind of rally. Definitely, valuations are very expensive at this point of time. Mid caps have rallied way ahead than even small caps as well. So mid caps is higher expensive than small cap and then large caps. So in my view, this is a time to be cautious for sure. I'm not recommending any of my clients to invest lump sum amount of money in the mid and small cap space. But currently, who have their SIPs on, they should not stop their SIPs who have a longer time horizon. As Mrin correctly said, 7 to 10 years is the ideal time frame for the mid and small cap space. But see, when you're investing in SIP kind of methodology, you're investing at the top as well as the bottom, and you're averaging over the longer period of time, right? So definitely this is a time to be cautious in the mid and small cap space. No lump sum, but definitely the SIPs should continue. There should be no stoppage in the SIPs.
Right. Rishabh, let's assume, so I don't want to stretch a point which both of you anyways believe on one side and are on one side, and maybe from a long-term perspective, trying to time the market tactically may not necessarily pay the richest dividend. So let's assume that it's a good idea to not stop the systematic investment plans. And if you're doing lump sum, if you want to, please be moderate. Ideally, both our experts are telling their clients not to necessarily go lump sum, but continue with the SIPs. So Rishabh, I'll come back to you. What funds can one look at within that pocket? Now, the leeway that I'm giving you, Rishabh, right now is to not just try and focus on, say, small cap funds or mid cap funds or a combination of those, but even if there are funds which have got a higher bent towards the broader end of the spectrum and also have some bit of safety while the large caps, which could possibly multi-cap funds or flexi-cap funds with a higher bent towards the mid and small cap space. What are the funds? One standard disclosure, viewers, this need not be an exhaustive answer. This could be indicative replies by both Rishabh as well as Mrin. Rishabh, I'll come to you first.
Neeraj, as you correctly said, margin of safety is very important, especially when you're investing in the equity markets. I mean, you don't see when a client or when an investor invests in the equity markets, they are always going to expect higher kind of returns, right? So it's very important. Although, see, it's again, I tell this on most platforms that you cannot predict the markets, right? But we can definitely time the markets. Right, when the markets fall, say like 10%, 20% or so, with the fall in the valuation, that's the right time to venture into the markets, right? So, in my view, currently, the large cap, see, all three segments, the valuations have inched above their 10-year average, so they are definitely expensive. But in my view, the large caps have a lot of catching up to do compared to the mid and small caps. The mid and small caps have rallied quite a lot. So in my view, rather than going into a multi-cap, because in a multi-cap, you're investing 50%. You are supposed to invest 25% each in large, mid and small. So you're investing 50% in mid and small caps minimum, right? So in my view, I would bet on a flexi cap strategy, because in the flexi cap strategies, on an average, we have seen fund managers and AMCs maintaining anywhere between 50 to 80% large caps at this point of time. So in my view, if someone wants to venture, I would say a flexi cap strategy or a focus funds or flexi cap funds would be a better bet than a multi cap.
Any names out there of any particular schemes that people can look at? These will not necessarily be recommendations.
So Parag Flexi Cap Fund is something what we really like. A second flexi cap fund is Canara Robeco Flexi Cap Fund. So these are the two funds what investors can look at this point of time.
Okay, Mrin, your answer could be different from Rishabh, but how are you thinking about funds at the broader end of the spectrum? Which ones stand out and why?
Yeah, so I agree with what Rishabh has said, and I think we are also going to see some bit of sector rotation as well. And I think it always, I think an all-season portfolio always has a good allocation to large, small, and mid cap. So if you've already done the small and mid cap, then of course you could take large cap allocation through the simple Nifty 50 index fund, or you could do it through an actively managed flexi cap fund, as Rishabh said. So I would say that yes, look at these two categories then.
Okay, and any particular funds or schemes that people should watch out for?
Well, I like the ICICI Nifty 50 index fund, and again on the flexi cap side, I like Parag flexi cap fund. I like Kotak as well. So I think these are some funds that people can consider.
They're pretty interesting. The last 3 years, almost every advisor's one of the favorite flexi cap funds is the Parag fund. I have heard nobody who does not like that scheme. And they're doing some good work. Okay, let's move on from the mid cap and small cap conversation. Remember, viewers, a bunch of our talking point conversations also talk about what to do with some of those stocks. So you'll get a plenty of ammo if you just look at some of the shows that we've done on BQ Prime in the last 3 days. on what to do with your mid-cap and small-cap allocations, whether in funds, as we'll discuss right now, as we have discussed right now, or on specific stocks, as we've discussed on the previous shows. Now, there are a bunch of, two kinds of funds are seeing a lot of NFOs or launches. One, very recently or ongoing, is this whole multi-asset funds, which are seeing there's a slew of products out there coming up. And sometime in the next 2 weeks, viewers, we'll try and talk about those as well. Today, we're talking about thematic funds, which saw launches happen in the last 45 days. So if I'm not wrong, and I'm going to be wrong by a week or 2 weeks here and there, but let's say in the last 2 months, we've seen the HDFC Logistics Fund, HSBC Consumption Fund, Kotak Quant Fund, Nippon India Innovation Fund, Quant Manufacturing Fund, and these are only 5, maybe there are more, which have gotten launched. Now, thematics carry an inherent risk of you not being able to necessarily time it to the right point of time, and therefore best to go in with an advisor who's advising you. But here we try and still talk to our guests and understand from them what do they think about any or all of these. Rishabh, it's a long list, 5 funds on one show. I'm not asking you to analyze all 5 of them, but if you had a chance to look at the thematic funds that have gotten launched in the last 2 months, did any of those stand out for you?
Neeraj, to be very honest with you, I really don't recommend any sectorial or thematic funds to my clients. The only theme-based funds, what really excite me is the global technology and innovation funds, which is, investors can invest through NASDAQ 100 or the FANG Plus index, because, you're not only investing abroad, you're having a global diversification, and also you're investing in US dollars as well. So in my view, I think keep it very simple, because if we go into the thematic and sectorial category, it's going to be an endless number of funds, because that is thematic is the category where there is no restriction for a particular AMC. They can launch n number of different kinds of themes in that particular category. And I mean, I just pulled out some data of the average flexi-cap category of sectors, what all they are having. So, at this point of time, financial, technology, auto, capital goods, and healthcare, flexi-cap funds do have a very healthy a mix of different sectors. I mean, see, when we are betting on India today, and we are seeing the amount of growth, what we are seeing today and what is expected in the next decade or so, I think every sector has its own merit and will have its own cycle of outperformance and underperformance. So I think, in my humble opinion, I think a flexi-cap strategy would be the best, and you let the fund manager take the call of which sector he or she should buy, when to buy and when to sell.
Okay. Just wondering though, there are 5 which got launched in this period. I know you mentioned that you don't look at thematic funds at all, Rishabh, but manufacturing, consumption, etc., are all themes which look to be very, very strong currently. Should investors research any of the thematic categories? We're not asking for fund recommendations here, but is there a thematic category that you believe might be good to research? People can then do their own research and figure out if they want to invest or not.
I think global technology and innovation is something what really excites me. Apart from that, I think flexi-cap strategies would do best. But because we are in a digital age, and going forward itself, it's just the amount of technology is going to increase in terms of AI and Chat GPT and God knows what. So I think global technology and innovation and targeting. See. There are many countries out there, developed countries, which are way far ahead in terms of global tech and innovation compared to India. See, India is a very good manufacturing country at this point of time, right? But we are still lagging behind in terms of global innovation and kind of, even during the COVID, I mean, the innovation the vaccination innovation was majorly done by the developed world, and then we were the largest manufacturer and so on. So I think global technology and innovation is something what really excites me and is going to do really well in the future, in my opinion.
Okay. Mrin, I presume you are also in the camp which doesn't believe in thematic funds. But since there are a bunch of them coming, I'm tempted to ask you, did you get a chance to look at any of these?
Yeah, I looked at all of these funds. And again, I don't recommend thematic funds. And I think generally most of the thematic funds get launched after there's been a significant run up in the stocks in that particular theme, right? And in any case, I do not recommend thematic funds because there are many factors that need to play out for the theme to play out. And I think the best example would be of the healthcare theme, which came in 2020, but did not really play out in 21 and 22, right? So again, what happens is that at the macro level, the theme needs to play out. The companies within the theme need to also perform. And, not all companies in these themes that we are looking at, like, for example, when you're looking at the innovation theme, right? Not all of these companies are going to be established companies, right? And again, the theme might look very great, but the returns may not really follow. And as I said, that most of these funds come out once the stocks have already risen. So then, is there really, is there enough value left in that particular theme or not? And again, I completely agree with Rishabh that I think we should just leave it to the experts to really figure out and research and figure out what's going to work and what's not going to work. The other thing is that when you look at the sectors in all of these themes, right? So you've got auto, textiles, and of course, a whole lot of manufacturing sectors, which are common in some of the themes. So these, in any case, would be there in the existing diversified funds. And even when you look at quant as a strategy, for example, right? So you're looking at a strategy where they're saying that they're going to not look at companies which have low governance or high leverage and so on and so forth. And these would, in any case, I think, be parameters that fund managers would be following for their diversified funds, right? So I don't really find anything new. And again, as I said, these are too concentrated. You're just better off being in a diversified fund, which will anyway identify the right themes for you.
Fair call. Okay. Point well taken. Before we wrap up the show, quick 30-second answers from both of you. Mrin, I'll start with you. If you had to do a portfolio composition of sorts, what would be the proportions be between, in the mutual fund portfolio, between large cap or strictly large cap funds, or a proportion of large cap to mid cap to small cap, depending on whether you're choosing a flexi cap fund, multi cap fund, or a mixture of all of these? What would the proportion be?
So I would actually just have like a what I typically say, the easiest way for anybody to make a portfolio is to have an index fund, have a flexi cap, actively managed flexi cap fund, which has international exposure, and have a small cap and a mid cap. I think, just these four funds in the portfolio. And of course, you change the weights based upon the risk that you're willing to take. But yes, if you are in it for at least 10 to 15 years, if you can hold for 10 to 15 years, I would tilt more towards small and mid cap.
Okay. Rishabh, the same question to you.
I agree with Mrin that if you have a 10 to 15 year time horizon, I think the maximum wealth is going to be created from the mid and small cap space. So I think depending on one's risk, probably anywhere between say 25 to 50% should be in large cap, and the rest can be divided into mid and small caps. So they can choose either they can go for flexi cap focus funds, or they can have a combination of a few flexi cap focus funds and mid cap and small cap funds. But again, try to keep a little concentrated portfolio, not an over diversified portfolio. So in my view, probably say around 4 to 6 funds should do great.
Okay, and viewers, if you want to understand why this is such an important thing, not to have an over diversified portfolio, about 4 or 5 weeks back, we did a show with one of the advisors was Karthik Shah, and when we spoke about how over diversification actually leads to a major loss in the kind of returns that you can make from your mutual fund portfolios, that might give you an idea or two. Meanwhile, Mrin, Rishabh, thank you so much for both of you for taking the time out and being with us on this leg of the Mutual Fund Show.
Thank you, Neeraj.
The pleasure was ours. Viewers, thanks for tuning in.